Oracle shares up 3% today after the company gave some updates on its AI business. At its analyst day, the company also confirmed a cloud deal with Meta. Shares, though, still up about 10% off, I should say, their post-earnings peak last month. Seema Mody is here with all the details. Seema.
This was an important update, Melissa. Executives revealing gross margins for that important cloud infrastructure business will be in between 30 to 40%, while revenue in 2030 is expected to reach $166 billion. This same business, by the way, brought in just $10 billion last year. So the bottom line is that revenue is accelerating rapidly. Gross margins are much better than feared, sort of throwing cold water on that report last week that suggested weaker margins due to the cost tied to buying hundreds of thousands of AI chips from NVIDIA and AMD. And just moments ago, founder and chairman Larry Ellison commenting on the fact that Oracle does it all, from building data centers, training the AI models, empowering the database. He adds that, quote, none of the other three big cloud vendors do that. They are primarily tech platforms. So throwing a bit of shade on his competition. Ellison, of course, referring to Amazon, Microsoft, and Google that had their competing cloud platforms. Now, with today's gains, the stock is now up over 80% on the year, and the company's CFO previewing that Oracle could see even more larger scale opportunities signed over the next 12 months. So they're sort of leaving the door open to another update in terms of higher guidance.
What was the tone amongst the analyst questions, Seema, when it comes to having the money to pay for all of these things?
Well, here's the thing. We were not expecting Oracle to detail margins for their Oracle Cloud Infrastructure business because in the past they haven't really disclosed that number. So the fact that they went for it and said we expect a range of 30 to 40%, which is higher than what the information was reporting last week. It is higher than what Wall Street consensus is. That level of clarity provided some reassurance to investors who, of course, are having this discussion around the stock is up so much. They continue to increase CapEx because there is this need to continue to buy these high-performance GPUs to stay up with their competition. But the fact that they're showing that there are these long-term profitability targets they can potentially reach, that's been working for the stock.
Yep.